Crazy, crazy, crazy. All right, that stream is getting going, so we should be live on our dear friend YouTube, and now I should be able to actually share a screen here. Let's do this, try to get my own face out of the way there. All right, and let me do one more thing, which is to actually shut off our baby monitor, which is giving us some noise through the background here. Unless you guys want to get the full play-by-play from the playroom on the other side of the house coming in through the background. All right. So you should now see my screen. I think we are good to go. All right, so it is March 15th, ladies and gentlemen. We've got a beautiful green day in the markets. Don't forget, we had a nice green pop last Friday, and it didn't exactly hold too well. But we are here once again and potentially trying to put a little stop on where we've been over the last 4 weeks. I'll talk about that a little bit more, but first let's jump into the sectors. So here's our sector overview. We can see this week in what ends up being, fairly close to a neutral week. Really XLE and XLU driving the upside here. Congratulations, we called it. Last Friday, we put our trade on XLE. Took a little bit longer to develop, but full 100% win on the free weekend trade. Anyone grab the XLE weekend trade last Friday and make 100%? Because it hit the target just a little bit ago as it popped all the way but clean over 89 today. Maybe you took a little bit off Friday on the initial pop, but even if you didn't do any action, you hit the target today with 100% gain. And so kind of exactly what we called there if you were on last Friday's session. Energy was really heavily beaten down in the first half of the week. We started getting the pop in the second half of the week, and we basically just played a kind of a snapback move to get back somewhere in the midpoint on the XLE correction. That's exactly what we got, up over 2.5% on the week, which is a great move for XLE, and 100% trade if you took it. Nice. Okay, glad to see some of you made some cash from the free weekend trade, even on a down week. Making money is nice, actually, maybe even better on a down week. So you did pretty well as well. I mean, just kind of a grinding month. Week for XLU popped on Monday and then pretty much held steady. And of course, XLY ended up being our big loser in the week. So we've talked a lot about technology. Technology fared negatively again, but not as extreme as people have been thinking. So all week, we heard things about tech and how ugly tech was, but really, since the Monday, end of day, technology has actually been basically break even for the last 4 days. It's really been XLY, which is discretionary stuff like Tesla, that has continued to pull deeper, deeper, deeper and move this market down. Communications not doing great either. And then even Staples taking a hit here, especially midweek with a drop on some of the big names like Costco and Walmart that I love to trade and have been trading more Staples, but they took a hit as well. Nothing obviously safe from the bearish market. And this goes to a lot of what we've been talking about over the last few weeks, which is that the market is not in a clean risk off and risk on environment. We're not switching from risk on to risk off in a clean back and forth kind of way. Today's another great example. This week as a whole is another great example. Why did Staples take a hit? Consumer staples on another very bearish week where a defensive sector like consumer staples should have gone up. Why today did energy have its biggest pop while Bitcoin had its biggest pop? Why did gold continue to go up today when yesterday it went up a lot on negative? Now it followed through on a positive day in the market. The risk on, risk off sectors and rotations are not moving clearly. Matt said he can't see my screen. Can everyone else see the screen? Should have the sector line showing XLE there at the top. Everyone else able to see the Okay, good. All right, yeah. Try. You could try jumping onto YouTube, or maybe just refreshing there. But yeah, okay, good. Everyone else is seeing it. Cool. Okay, so again, I think that's the big takeaway. We need to trade things on an individual basis. Look for some of those snapback moves, but not just expect risk on, risk off things to play out as we expect. All right, let's keep moving along. But congratulations on everyone who took the energy trade. Beautiful trade. You love a winner when everything else is red. Okay, NASDAQ overview. Now, this is really no man's land for the NASDAQ. Now, for our two-way option trade, this is perfect for us. We'll talk about that in a minute. But for regular directional sentiment, this is kind of worst case scenario that we got this big 2% plus move, and it's not in a key area of support. It's not based on any kind of trend line or shift. Nothing technical about our stopping point in the middle of this zone gives us a lot of confidence on the NASDAQ. Like I said, it's perfect for the two-way trade. I'll talk about why in a moment. But from a pure directional standpoint, this is kind of worst case scenario because you have nothing to go off based on the 2% move here. We're just kind of still hanging right in the middle of no man's land. So I think what we need to be careful of, which is what we saw, by the way, last week, be careful of a little bounce here back in the 500 range and then a continuation lower. That's what I think we need to be really mindful of, is that if we get some continuation early next week, we're not piling back on to the bullish side. We really need to be careful of a retest. Now, if you want to take a couple little trades, basically playing it back into that retest, I don't think that's a bad idea. Just make sure you're thinking very short term. You're thinking of that kind of 500 level as a target area, and then looking for potentially a continuation lower. We've gotten a lot of fake outs in the last several weeks, but specifically during this really steep decline over the last 20 days. So I think, especially on the NASDAQ, you got to be very, very careful. When I say NASDAQ, I really just mean trading the QQQ, because that's what we trade most actively. And in that, on the Qs, we're kind of right in the middle of no man's land. Now, the SPY looks a little bit different. So on the S&P, we still kind of have a little bit of hope here that we're actually finding some real support. I say a little bit of hope. Kind of reminds me of the Dumb and Dumber. So you're saying there's a chance. There's a chance that this is real support, but I would be very cautious with the S&P. Like I said a couple weeks ago, I think the QQQ is kind of leading the pack. It's made a deeper correction already. I assume that the S&P is going to follow suit here and make that type of correction and get below 560. But there's a chance. It looks like this could actually be a floor for the S&P. And like I said in Telegram, the one thing we're seeing today that I think is really, really interesting. I don't want to draw too many conclusions, but we have not seen a day that opened positive, followed through, and closed positive in a long time. We've seen gaps down that then closed lower, right? So we've seen that on the negative side. But we have not seen that on the positive side in a long time. For example, even if you go back to last Friday where we got that huge move up, it was really just like 30 minutes of massive volume spiking into the end of the day, moving us up about 1.25% on the QQQ in about 30 minutes. It was not a consistent optimism to open, grind higher type of day. We literally have not seen one of those in a month plus. So this is unique today, what we're seeing. And so it could be that we're really trying to cement a floor here. I say could because I would be very, very cautious with that assumption, but it could be that this consistency that we've seen for the first time in over a month to the upside means, hey, we're not just getting a little spike of optimism, not just a positive CPI that's going to sell back off, but a real move toward, hey, we found an area where institutions, where liquidity is stepping back in, and we're going to start trying to build off something. So again, I'm saying there's a chance. I'm not trading it directly. I'm not stacking long positions right now, but I think this is probably the most optimistic day we've seen in the market since the initial breakdown below 600 on the S&P. So just something to be mindful of, that if we do start seeing some follow through, you could take some stabs. The way that I would handle this, folks, if you are optimistic, which I don't know, give me a yes in the chat if you're optimistic. If you think, hey, we found a floor, we're at least going to make like a midpoint correction, even if not maybe we're not shooting to all-time highs, but you're starting to get optimistic that we're at least going to get a bullish correction, if not a bullish all-time high continuation. Anyone? No optimism? I got no yeses in the chat. Cody says optimistic. Okay. Janine says optimistic. Carmen, okay. Not a lot of optimism. Okay, not me either. I'm only 30% optimistic right now, but I do like the way that this day unfolded purely from a liquidity and a directional standpoint. And so what I would say is, if you are optimistic, which I don't have a lot of folks in here who are, I've only got about 5 who are optimistic, I would look to trade it on a short-term correction first. In other words, don't get loaded up with long-term moves where you're trying to target all-time highs. I would start taking a little cut of the pie, a small 25% correction of the longer move. Start there with a shorter-term move, try to get some wins. And if it keeps breaking higher, okay, take some house money that you got in the short term and extend that a little bit. That way, you can, even if you do just get a little retest, you can get some cash off the table, take some wins, and you don't have all of your coins in the "I want all-time highs again" piggy bank, because I think that's just a little dangerous, even with the liquidity that we've seen so far. So I'm very hesitant, but I think there's a chance. Yesterday I would have said I'm 10%. Today I'm 30%, and it really is not because we just got a bullish day, but because of how the bullish day has formed today, with continued liquidity stepping in from 9 a.m. actually from post market yesterday all the way through. And we'll see, unless we get a sell-off in the next 2 hours, which could obviously change the picture a little bit, and would kind of push us right back down into a very pessimistic view heading into next week, which is very possible, by the way. We've seen end of day moves be very big, and we've seen especially Friday end of day moves be very big. So I'm not ruling that out, folks. We could get a 2-hour washout here before this candle on the weekly chart closes. But assuming we continue to step and at least stay kind of where we're at right now, that raises my level of optimism, quite a bit. Like I said, maybe 10% optimistic, thinking, hey, we're definitely headed toward the 440 zone here too. We'll see if the S&P leads and maybe a little more productive. All right, let's jump in to our free trade. Before we get into that, I do want to mention I'm going to talk about discount versus a falling knife. How many of you in here? I know I'm always asking you to use the chat. It's because I don't want to just be here talking to myself. I need some friends. So I need some chat. How many of you are at the point now where you're looking to buy some discounts? You say, okay, correction sucks, losing money sucks, all that good stuff. But now, hey, are there some discount stocks that become interesting at this point in the correction? Yeah. Okay. Good. Okay. So I'm starting to get to that point as well. But I think most people go about buying discount stocks the wrong way. And so I want to walk you through a couple bullet points I have on that, and just give you my point of view on how to go about buying discount stocks. Again, just my point of view, my 2 cents. But we're going to cover the free trade first. Then we'll jump into that. Then we'll jump into the two-way trade and why there's such a good opportunity there. So high risk weekend trade. We got PGR. Remember last week we did XLE, hit a nice 100% winner there on XLE. We're going to take another stab here on PGR. That's Progressive Insurance. Progressive Insurance is one of my favorite stocks on the planet. And one of the reasons that it's one of my favorite stocks on the planet is because it goes up in bullish market environments, and it can go up in bearish market environments. One of the few stocks that can go up, not just up, but significantly up, actually outpace and outdrive some of the other stocks in relative terms in both market conditions. So that's really the big reason it's my favorite stock. Had a nice little 8-day pullback, and now we're looking for PGR to make a move. So this is basically targeting back to the highs here on PGR. You can do this by targeting a move of 287.50 by March 21. Okay, what does that mean? It means over the next 7 days, can we get a $4 move, about a 2%, actually about a 1.7% move in PGR. Now, as always, I grabbed this trade about an hour ago. So if PGR has moved 50 cents or 60 cents in one direction or the other, the pricing might be a little bit different here. But the trade is to buy the 285 call at the same time, sell the 287.50 call. That's a debit spread, risk defined. All you can lose is the dollar per contract that you're trading. And then we target $2.20 with a good till canceled limit. This is how I usually trade directionally, a risk-defined debit spread. If you're new to debit spreads, you can just YouTube, how to set them up in your broker, how they work. It's very readily available information. And if you're comfortable with debit spreads, then you can just jump right on there. But that is our trade. I just posted it in the chat there. Target's about 120% ROI on about a 1.7% move on a very bullish stock. Those are the kind of risk reward that I like to set up. I can get, an outsized ROI on an undersized directional move. That's exactly what we're doing here on PGR. Still a high risk trade. We're only giving it 7 days. It's a very short time to give a stock to make a directional move. So still a very, risky kind of short-term move here, but one that I like and on a stock that I really, really like. So that's your free weekend trade. Let's hope we hit another 100+% winner. Sam, I'm just taking a couple contracts. These high risk trades, I don't go too heavy on. It's about $1 a contract, so I'll maybe take 5 to 10 contracts. Nothing crazy on my side, but you can trade it with as little as $100, $105, depending on if it's where it's at. Robert says it's about 103 right now, so about $103 a contract. And you can trade, 1 contract, 10 contracts, 50 contracts, whatever you are comfortable with. And each contract is going to have a little over 100% ROI potential based on that $2.20 target. The way this works is you get filled on the trade. As soon as the trade fills, you set up a closing order with your limit. And then that closing order sits in your broker over the next 7 days so that anytime Progressive makes a move, you have a chance to get out, even if your computer's closed, you're not watching the charts. You set that limit up and you let the broker do the work for you to get out of the trade. All right. Lesson of the week: buying at a discount versus catching a falling knife. I think that these are things that people do, recklessly sometimes. I think people get the wrong idea with discount stocks sometimes. And so I just want to give you my 2 cents here on kind of how I think about buying at a discount versus catching a falling knife. Okay, so let me walk you through a couple notes. So here's my thoughts. There's no such thing as a discount option trade, in my opinion. Okay, so I would never buy an option just because the stock is down. That's not a good reason to buy an option, in my view. Roxanne, for the closing trade, once it's filled, you would just basically create the closing order immediately. So depending on what your broker is, it might be like a double click and then a set closing order. It might be a right click. I would just use YouTube, Roxanne, for how to set a closing order on a debit spread. And whatever broker you have, there should be lots of YouTube examples. So what do I mean by this? Well, if the idea is that you're buying a discount stock, then it really goes to the second bullet point. There's really no timetable on that. A discount stock doesn't mean I'm buying a pullback and ready for it to snap back. What it means is I like the stock long term. I'll buy it at a discount and I'll hold it. And when it eventually goes back up, I'll have a positive ROI, right? So doing that with an option, in my view, makes no sense. You should only trade options if you have a real timetable. And with a discount stock, you should not have a timetable, right? The idea here is you're going to get value. You're not going to get direction. And so if the market pulls back another 10%, it's fine because you still got a decent discount. And now, you might maybe buy even more at a better discount. And the key here, and the easiest way to think about it, is bullet number 3. I would only buy a stock at a discount that I would have bought anyway. Okay, so think of it like this. If a stock becomes attractive to you because it dropped 10%, I would not buy it. That's not a good reason to buy the stock, right? The whole point of buying a discount stock is that you would have liked it at the value that it was anyway. And now that it's a discount, it's a better value and you're willing to hold it. So you should only buy a stock that you would have already been willing to buy. Now it's down 10%. Okay, great. I'll get it 10% cheaper, right? Because if it falls down another 10%, you shouldn't be thinking, oh no, what have I done? I bought the stock, I'm down 10%. You should be thinking, hey, I'm down 10% instead of down 20%. I'm ahead, right? Because you bought it at a discount and you would have been fine buying it anyway. Really important, okay? A junk stock that starts falling 20%. Now you say, oh, now it's kind of interesting to me because it's down 20%. That's not a discount stock. That's just buying a falling knife for no good reason other than it's cheaper than it was relative to recent performance, which is not a good reason to buy a stock. Okay, the next question. When does it become a discount? Okay, when does it become a discount? Well, for me, it becomes a discount anytime it's cheaper than I would have been happy to buy it anyway. So Progressive, I would have been happy to buy it $290 if it hit those highs, right? So it's already a discount because it's 1% cheaper. It's 2% cheaper. Again, it's not that a stock falls 25% and now I'm interested in it. It's anytime a stock is cheaper that I would have been happy previously to buy it. Now it's a discount. All right. Again, the discount itself doesn't make it worth buying because there's lots of crappy stocks that go on a discount and never recover. So when does it become a discount? Anytime it's at a better value than you would have been happy to own it anyway. Okay, then the other question you have to ask yourself is, what is the harm in waiting? What's the harm in waiting for it to come back? What's the harm to you? Let's say you like a stock, it's down 10%, maybe you want to buy it. What's the harm in waiting for that stock to come back while you trade other stocks that aren't being done, that don't have falling knife characteristics? In most cases, there's very little harm. Sometimes you might think it's kind of a slingshot opportunity. It's really overcorrected, like I had CrowdStrike last year after that breach. I thought was really overcorrected in the short term, and so the harm was missing an easy 20% return. Okay, valid, good, buy it. But in these cases, there's not really a harm in just saying, yeah, it's down 10%. I wouldn't mind owning it. I'll just wait. I'll just buy things that aren't falling knives right now and wait until it comes back. So that's the last question that I would recommend generally. But there's a much more important thing that I think to keep in mind is, how are you defining a discount? Okay, how are you defining a discount? Is it truly undervalued? Is it trading for less than it's worth? How many of you think that's a good reason to buy a stock? It's truly trading for less than the stock is worth, the sum of its parts, so to speak. That's one way that you can define it. I would say no. Don't buy a stock because it's truly undervalued. There are stocks that are truly undervalued for 50 years and they never make new highs. Okay? We live in a world where a truly undervalued stock is not even a good reason to buy it in the first place, let alone because it gets more undervalued. Okay? Not a good reason to buy a stock, in my opinion, even if it's truly undervalued. Number two, undervalued relative to recent performance. I think this is the worst reason to buy a stock. Okay? Just because it shot up and had some hype and now it's discounted doesn't mean it's now a good reason to buy it. Maybe that, discount is actually just correcting it back to a normal price. Maybe it was overhyped like a weed stock in 2018 or whatever, and it's going to be going undervalued for the next 7 years. It's not a good reason to buy it. What about undervalued relative to long-term performance? Right? Well, it's a better reason. I'll give that a yellow. Undervalued compared to long-term performance, that's a better reason to buy it. But it's not a great reason to buy it. It's not a great reason to buy it because there's lots of stocks that have had fairly long-term trends and then started underperforming, and then they stayed underperforming for 10 years. Okay, so just because they've had a trend doesn't mean that that's a good reason to buy it all the time. Like I said, better reason. There's lots of good trends out there, and when they correct, it's not a bad reason to buy a stock. But really, if you ask me, the only real reason to buy a stock at a discount is this one: that it's undervalued based on a realistic forecast of the future. So it's not just it was a good trend, but you truly believe this is a very profitable stock for the long-term future, and now I can get it at a little better price. Okay, so when you think, what am I buying at a discount? Am I buying it because it's technically they have good cash on their portfolio? Again, I don't think that's a good reason. Stock stay undervalued for decades. Is it that it shot up and then it snapped back? Now I'm going to buy it for the next shoot up. That's not a good reason. There's no reason to think that it's going to shoot up. What about long-term trend? Well, like I said, better reason, but trends end and stocks go from being good stocks to bad stocks all the time. So to me, the only good reason to buy a stock at a discount is if you're actually looking at a very realistic future forecast saying, I believe this stock will do well for the next year, 5 years, 10 years, and I would have bought it anyway, so now I can just get it at a little better value. All right, does that make sense? So for me, most times when people buy stocks at a discount, they really go about it all the wrong way. It's a steep decline, so they're buying. It was a good trend, and now it's pulling back, so they're buying. I don't think those are good reasons. I think the only reason to buy a stock is that you would have bought it anyway. Now it's at a slight discount, and you still believe that it has a great future ahead of it, and so now it makes sense to buy that stock because you can buy it at a little better price. Okay, make sense, everyone? Now, let me give you a couple stocks that I believe fit that bill. And what you'll notice about these is that they're not shocking undercover stocks that have been crushed 80% and now they're going to spike. These are very normal stocks that I would buy under regular circumstances. Meta, Coin, Walmart, Tesla, Apple, and AGQ. Okay, Meta, I think, is the best Mag 7 stock. I think it's the best positioned. Meta and Apple, I think, are the best positioned because the AI race should favor them almost no matter what. Okay, so even if Meta doesn't develop some amazing AI, which they probably will, even if Apple doesn't develop some amazing AI, which they probably will, people are going to use AI through their products either way. The reason I give Meta the edge over Apple, although, like I said, I'll buy both. I give Meta the edge because its market cap is still $1 trillion lower. And so I just think there's more obvious room to the upside. And Meta's been aggressive about acquisitions. I think they've done a great job on their acquisitions. The TikTok thing will be interesting to see how that plays out and if Meta grabs an even bigger market share. So I like Meta. Great question. Michael asked about the leverage stuff, like if you bought METU or TSLL. Michael, I would not do that on the long-term ones. I would do it on a timing play. So if you're trading like what we did on PGR, so you're trading like a directional 2-week move, then go ahead and trade the leverage, because if you win, great. If not, you don't. But I would not do it on the leverage plays unless you're already trading into momentum. Here, we're trading the opposite. We're trading a pullback where the leverage instruments underperform. So in an underperforming, we're trading the pullback. We're just trying to get in at the discount. It's kind of the opposite. You would trade the real versus the leverage. If you were trading with momentum, then you could trade a leverage one like AGQ. So AGQ, we're trading with momentum. So in my opinion, the leverage will outperform when you're trading with momentum, because it overperforms to the upside. But if you're trading to the downside, or not trading to the downside, but catching it on the downside, then I'd be more careful with those leverage instruments. So Meta, Apple, Tesla, I would not trade the leverage, but silver, which is AGQ, I would trade. But anyway, I got ahead of myself there. Meta, I like because I think it's the best stock, the most AI resilient in the Mag 7. Coin, I like because I think crypto will have another cycle. Now, Coin is the highest risk because it might go down another 50% before that cycle happens. And I would add on to it during a continued downtrend, simply because I believe crypto will have another super cycle and Coin will benefit dramatically from Okay, so that's coin's the highest risk, definitely has the most downside in my view, but I would trade it or I would buy it and continue buying it at a discount for that reason. Walmart, I think, is the best retail stock on the planet. I think they've become more robust. I think their delivery approach is now just as sophisticated as Amazon. Their online approach is not as sophisticated as Amazon, their online shopping, but it's getting bigger and better every month. And I think that they are much more resilient to difficult times than Amazon is. Amazon now has great staples, so they're more resilient than they were 10 years ago, but still so much of their spending is discretionary compared to Walmart. So I like Walmart. Tesla, I think, is obviously at an extreme discount right now. And I think that even if the electric car industry continues to struggle, which I think there's a good chance that it will, I think that the robotics aspect is real. I think that Tesla has lots of backdoor ways that it can generate revenue, supplying stuff to SpaceX, all kinds of different avenues like that it can generate more revenue. And so I think Tesla at the discount is worth buying. And I personally believe Tesla will make all-time highs once again. Now, whether that's a year from now, 5 years from now, 10 years from now, I don't think Tesla is dead. Yes, I think Elon is more distracted. Yes, I think his core Tesla consumer base is suffering and walking away, and the cult following is taking damage, real damage. I do believe that, but I think that there's still so many ways for Tesla to get upside that we'll see it hit all-time highs again at some point. Sorry, I just hit my own laptop. Apple, I mean, I just think it's the best stock on the earth. It doesn't have as much upside maybe as Meta at this current juncture in the Mag 7, but can continue, like I said, to take advantage of AI, whether it develops the AI or not, through its massive device. It's going to keep coming out with new iPhones. It's going to keep coming out with new iPads. It's going to keep coming out with new AirPods. It's going to come out with, glassware technology. It just has a product line that never has to end, and that bodes very well. AJQ, I think, is an interesting one. AGQ, that is a leveraged silver. Like I said, we're trading with momentum because silver and gold are moving. Let me go ahead and throw these in the chat, by the way. And so I think that those are both interesting, gold and silver, but silver has underperformed so far. And so I think that silver kind of gaining some consistent ground here and making all-time highs is a very high likelihood. And so holding AGQ makes sense to me, and it's why I'm holding it. So there's a couple that I do believe. Like I said, these aren't like sneaky $3 discount stocks that are going to go to the moon. They're really just, stocks that I have a positive forecast for the future, and I would have bought at higher values. And so now I get them so hopefully that's helpful. Jim, I would not buy leaps. I would not buy options at all on discount stocks. Now, I would trade these stocks independently in directional environments. So I would trade Meta with options in a directional environment. But as far as the reason to buy it now at a discount, I wouldn't use options because you have to be prepared for it to have a 10 or 20% deeper correction and then wait 5 years and be totally fine with that. And so obviously options die on the vine in that environment. All right, so why do I love today's move to set up our next two-way option trade? I was talking about why today's move makes me so happy for our next trade, which we're going to get into here in just 20 minutes. Well, we've already had a really nice run here of these big moves. We hit 4 two-way option trades in a row, really nice winners there already. And after a big jump like this in the middle of the sell-off, now we've got a 2+% jump today. What's the most likely thing to happen next? All right, what do you guys think? Tell me in the chat. What's the most likely thing to happen next after a really big, 2+% corrective day in the middle of a very steep fall off? Well, we either are likely to get a retracement, right? Yes, you guys are saying it. We're very likely to get a retracement to the upside or a drop right back down to new lows. Right? Those are the most likely things to happen. One, a corrective area back up, or like we've seen the last couple of times, a drop. It's just a correction and a drop right back down. So those are the two areas that are most likely to happen in my view. Well, our next trade is going to win if either of them happen. And that's exactly why I love the move we got today, because now if we didn't get this move, we just settled down here. Now we risk being stuck. If we go down and pop back up, we're kind of stuck in no man's land. Now we're in the perfect position, because if we get that retracement to the upside, we're going to win. And if we get that drop back down to lows, we're also going to win. So either way, this two-way option is in great position to win. So we're going to set up that trade live in just a couple minutes. If you're not a two-way option member, I would love for you to join that trade. We'll set it up live. I'll kind of walk you through it, and you'll see exactly how that works. Okay, so we're going to do that live here in, let's see, 22 minutes. Right? Yeah, 22 minutes. So if you guys want to jump into two-way options, let me just, I'll quickly run you through. Bear with me. I'm going to talk fast and go through this quickly. If you guys want to jump in to two-way options, if you're not a member, but you want to be in our class, let me just run through it really quickly. So it's called two-way options. It's a alert service based on exactly that, trading in both directions. And we're basically leveraging these very specific set of options using multiple legs to target, automatic target, like we got yesterday, without even having any clue or any plan on which direction the market's going to go. I mean, literally not even trying to forecast the market at all is really the key behind two-way options. So like I just showed you on that previous chart there, we're not trying to predict anything. We're going to win regardless of which way. So here's kind of the bullet points. It's very small account friendly. The average trade on two-way options is about $70. So you can trade one contract, two contracts, 10 contracts. The average weekly payout is actually over 1,060 now, because we won two more trades since I last updated this. So we've got no, Kevin, the March 17th trade closed out yesterday with an automatic win. If you had the 88 cents target there, it hit yesterday very comfortably with an automatic exit. So that one is out with a winner, and our new trade will be live today. This says 84.6% win rate. It is now higher than that with our most recent trade. And so this strategy has been rolling right along exactly what we want to see. And in just a moment, I'll show you how that actually stacks up. But first, let me just walk through what you're going to get. Obviously, the main thing is you're going to get our weekly two-week trade. That's a new signal, 50 plus opportunities, exact same signal that's been targeting over $1,000 on average, including winners and losers over the past 8 months. Sometimes even better, like July 3rd. This is a beautiful trade that we actually ended up getting over 100%. And then a couple days later, we got another trade. About 5 minutes of work on that trade, still worked about $4,259 in about 48 hours. And remember, we had a target. You can see here, the green band is the target to the upside. The red band is the target to the downside. Either direction, we're set up on the very same trade to get a win. That was $9,675 on just those two trades alone. Okay, track record on this has been incredible. $26,000 without compounding a single trade. And hold on, let me go back here. Yeah, here, I didn't update this, but 84.6 now over 85% win rate, average return 21%, average winner over 40%, even though you're trading in both places. And my favorite thing is the profit factor is over 2.66, even on a trade that's going in both directions. Kevin, did you have an 88 cents good till cancel target set on your trade? I think everyone else jumped in and said their target got hit, so yours should be hit. What broker are you using? Well, that's what I'm using. Okay, Kevin, let's talk about it on the 2:30 session. I'm going to ask everyone else if they were filled as well, but I'm using TOS. I'll show you my fill here in just a couple minutes, then we can walk through where it sits currently. So make sure you jump on the class here in 20 minutes. We'll go through it in detail. Okay, let me go through a couple other things that you'll get if you jump in here in the next 20 minutes. You'll get the class, Expanding Opportunity. This takes you through a couple extra things. How to get, some opportunities on SPY, QQQ, IWM, and, again, being able to trade those assets as well in either direction. Not only that, you get the calculators, which I love. The calculators help you set up knowing exactly what your risk reward is. So like today, when we put on the trade live, you're trading it in both directions, but what's your risk reward? How much are you risking versus how much you're going to get if our take profit is hit, like hopefully it is automatically, like we like to see. This calculator helps you do that automatically. Normally, the class and the calculator would be kind of a separate thing that we'd sell. Obviously, that's not the case. As long as you join two-way options today, you will get that for free. You'll also get the live trade tracker, which shows every single trade that we've taken so far. Like I said, 84.6% win rate now, over 85%, 2.66 profit factor. Love to see that on a trade that's this high probability. Average return about 21% per week. Pretty darn good, especially in these hectic markets that we've seen lately. Like I said, if that 21% was per year, it'd still be twice as good as the S&P, but it's not per year. It's actually per week. Okay, so if you want to join, let me just pop this open. By the way, the average move we need here is about 1.5%. The way that we set up these trades, the average move we need is about 1.5% in either direction. If you've been following the markets lately, you know they're moving more than that in a given day. All right. So, once you set up these trades, literally either of those moves, you are good to go over the course of 10 to 14 days. Okay, let's talk about the special deal. Here we go. ProsperityPub.com/win. Okay. I'm rushing through this because our class starts in 15 minutes. You can also call 904-706-3537. Okay. Now, what you're going to get for that, by the way, is 2-year access. So you're going to get 100 trades, two-way option trades, sitting with an 85% win rate and over 21% return. You're going to get 2 years of those for $12.90. Insane deal. Join right now before our class. You got 15 minutes. Lock in your membership, then log into the live class. We'll do our very next trade with you together live. All right. Here's what the stats have been. They're not updated. We have a winner since here, but 84.6% accuracy, now 85-point-something% accuracy. If you took every trade, you would have 5x your investment already, over $26,000 in 8 months. That's with the market going zero in 8 months, folks. I mean, think about that. The actual market has gone 0% in the last 8 months. We've done a 500% return on your stake over the exact same time frame with these trades. That's why I'm so pumped about them. You could have already covered the membership 19 times over, and hopefully we'll get another winner today. I won't go through all the testimonials and all that good stuff. Let me just jump through here and hit a couple questions. By the way, this is the bonus for lifetime members. Next trade, lots of good examples. Fun. Winner, winner, winner. More winners. Trading in either direction. 1.5% more winners. Lots of winners. Lots of winners. More winners. All right, so we go. Q&A. Okay, this is what I was hoping to get to. Okay. How much money is needed? The average trade, $70. Is it day trading? No. Average trade, 7 or 8 days holding time. Okay. So it's not a day trade. You have plenty of time to get in to the trade. Will every trade be a winner? No, of course not. No strategy is going 100% of the time. You know the drill, but we are killing it so far with real trades. Should you be worried about more downside? Well, I think everyone would say yes. You should be worried about more downside, and that's why this is the perfect strategy to have right now. Whether we get a bounce or a crash, we are good to go. Can I trade it for an IRA or 401k? Yeah, you got to have the right options permissions, but it's risk-defined options that you can trade in any type of account. What's the next two-way trade? Well, we'll find out here in about 15 minutes. We will do it live together. I can't wait for that. We've been on a roll, and I love to see it. Max risk is whatever you pay for the trade. For those of you asking, what do I risk? You risk whatever you pay. So if you do one contract, you're risking $70. 2 contracts, 140, just depending. Normally the average price is about $70 a trade. How do we close the trade? You don't wait for an exit signal from me. You don't wait and try to guess when to get out. You just set a target and you wait for that target to get hit automatically. That's it. Nothing from me, nothing from you. Just a target as soon as we get set up, and you let that hit automatically. Is there any sort of guarantee? Yes, you get 14 days. Join the class today. Watch the strategy. See if you like how it works. If you don't, no worries. Do I trade this with my own money? Yes, you'll see me trading with my own money today in about 15 minutes. And again, the performance has been awesome. All right, let me. Oh, well, it costs $24.97. That's an important question. $12.90 for 2 years. Best deal ever. Hope you join. And yes, there's a lifetime option as well. Okay. ProsperityPub.com/win. Please jump in here so you can join us for the live class. I've been saying it all week. I'm going to say it again. I can't imagine a better strategy for the markets we're seeing right now than two-way options. I mean, it's literally the whole point. I developed this back in July. I rolled it out in January. I said, guys, things are about to get crazy. This is the strategy you want. And since then, we've been crushing it. I want you in for that very reason. And, in the next 13 minutes. I mean, even if you join in the next hour, you'll still get the trade alert. You have plenty of time to get in before the market closes. But I'd love to have you jump in, join the session, get our first live trade going, and hopefully get a move next week that puts us in ideal position for another winner. Okay, any questions in the chat? Yes, the risk is whatever you pay for the trade. So whatever you pay for the trade, that's how much you risk. Yeah, if we don't hit a winner, it just expires as a loser. And we do take losers on occasion, obviously. 85% of the time so far, we've hit nice winners, but that means sometimes, in our case, about 15% of the time, we've just let the trade expire and take a loss, which is totally fine. It happens. Sometimes the market ends up not making that move that you needed to, and you take a loser. That's all part of the game. Yes, you can trade GLD with the same exact type of strategy. Okay, and let me know if you're going to be in the class. I'd love to see you. Just pop in the chat and let me know if I'll see you in the class here in about 10 minutes. Roxanne, okay, awesome. I'll see you there. Whoa, just do there. Okay. Okay, I'm doing something crazy with this chat. Dan, I'll see you there. Perfect. Lou, Frank, DDC. Okay, Brent, I'll see you there. Jennifer, I'll see you there. Jim, I will see you there. Friedman, I'll see you there. Dan, okay. Danny B, lots of Dans. Lots of Dans rolling in here. All right, I'll see you there. Sam, I'll see you there. Bill, I'll see you there. Okay. DJ, I'll see you there. Oh, nice, it'll be your first one. Sweet. Okay, looking forward to it. Robert, I don't give you an exit alert because you don't need one. Sophie, I'll see you there. Lynn, I'll see you there. Steve, I'll see you there. RJ, I'll see you there. Beautiful. Okay, I can't wait. All kinds of people. Doug, yes, there's going to trade today here in about 10 minutes, but I'll also send it out in an alert. I don't send out an exit alert for these because it's just a target, so it hits automatically. So you don't need an exit from me. You just set the target and let it fill automatically. Tracy, yes, $1,290 for 2 years of access. So you get over 100 trades for $1,290, even though we're averaging over 20% a week so far in these crazy markets. Yes, I give the target. Robert, I give the exact exit criteria and everything with the trade. Steven, the cheat sheet. I'm not sure what you mean on the cheat sheet. Can you clarify that one for me, Steven? Tracy, if you call, I'm not sure, to be perfectly honest with you, but if you call that 904 number, they would be the ones to let you know. Great question about the other side of the trade. So I was talking about this yesterday. The way this works is that it's one trade with one target. So when it moves up, sure, one side will be losing and one side will be winning. But the cool thing about this trade is that the losing side still has a little bit of value left on it. And so we kind of sneakily add that value into the value of the winning trade for one exit. So that's one of the reasons this trade works so much better than a regular straddle or a strangle or something where you're trading in both directions. Really a key to cracking the code is doing it that way. And we can talk about that more in the class as well. Robert, it's very different than overnight options. Overnight options is, of course, bullish only. Consistently swing the bat. You'll go on streaks where you win 7, 8 trades in a row. You go on streaks where you lose 2 in a row. Over time, obviously, I love overnight options. When we're on a roll, we can really stack up wins quickly. But the drawdowns will probably be a little steeper on overnight options than they will be on two-way options. So just two very different types of trades, to be honest. And the reason I invented two-way options because I had so many that were very bullish, overnight options, automated options, even jump trades. Mostly I'm trading to the upside, and I wanted something to that. Steven, okay, can you send me the link? That should not be the case. Maybe it was a mistake from our team. Steven said he got a link that was confusing and it was not about the dividends for something else. Okay. Stephen, would you mind sending the link? Dakota, who's on the call right now, can grab that link and check it out. Apologize if we sent a broken link or a wrong link out there. All right. Any other questions before I log off and log into our next one? Okay. Just out of curiosity, Stephen, can you tell us where you got the link from? Was it directly from an email or was it from a report? That way we can try to track it down and fix it. Obviously, it's never our intention to, you know, confuse people or get things, in the wrong place. Oh, on the actual physical one. Gotcha. Okay, well that's not great. Well, I'm glad you found it, Stephen, because I had no idea that was the case. Thank you for letting us know. I appreciate it. We've mailed out hundreds of those, and I had no idea. So I appreciate you letting us know. Keep in mind, our team, we have thousands of links out there. So, we do obviously never our intention to confuse anyone or mess up any links, but it does happen. Dakota, can you grab Steven's email so that we can send him the correct dividends presentation? RJ, you can use SPX. Anything that I trade on SPY, you can use SPX for and just use the same percentages. So if it's 0.2% out of the money, use the same 0.2% out of the money. It'll always work in tandem. The reason I use SPY is because the volume's a little bit better. So that's really the only reason I use SPY, just because the volume's a little bit higher, so the fills come just a hair easier. But outside of again, we're talking minor changes. Outside of that, you can always replace SPY with SPX. Thanks, Dakota. Right. Well, I'm going to jump into the other room. I know a whole bunch of you said I'll see you in there, so I'm looking forward to that. I'll see you in just a couple minutes. Hi, everyone.